Are you a beginner and are you stuck on how to figure out how to buy index funds? Well, watch this video on my 3-step process on how to invest and buy index funds. So for the best millennial investing advice, make sure to hit the bell and subscribe to this channel so you get notified of when my new video drops every single Monday, where I help you make it rain on your Mondays. So maybe your friend is like, hey man, you should really invest into index funds. And what they really mean is S&P 500 index funds. But you know, you go out there, you do your research, and you're like, damn, what are all these letters mean? How do I actually place a trade? What are steps? Say no for it, fam, I got you. By the end of this video, you'll have my 3-step process of how I buy index funds, and it can be your foolproof strategy to create your kick-ass automated investing machine / portfolio. I've proven this formula with a lot of my friends, and I've also helped out a lot of my clients over at Kickass Investing. Now it's your turn. Before we get started, I would love to get this discussion moving and going. I would love to kind of hear, when was the first time you heard about index funds? Please comment below. Tell me who. Was it your aunt, your uncle? Was it this beautiful bald man on YouTube? Please let me know in the comments below. So it was driving me crazy. I was seeing these videos on like, hey, what is better, index funds versus ETFs and all that? And that told me that people do not know what the fuck they're talking about at all, right? Here's the truth. There's a lot of misconceptions on what index funds are. And so today I'm just here to kind of set it straight, you know, and just share what I know about these funds. So before we delve into it, let's kind of go over what exactly is an index fund. And an index fund is not just the S&P 500s. If you don't know what the S&P 500 is, it's the most popular type of index. It's one of the most popular types of index funds out there. Hear everybody talking about it, but essentially it's the top 500 companies. The S&P 500 is just one type of index a lot of funds follow. They can come in 2 flavors. It really comes down to ETFs, or exchange traded funds, and mutual funds. And both of these will track a market index like the S&P 500, the Russell 3000, the MSCI ACWI index. You might have heard the Dow or NASDAQ as well. These are all basically market indexes. And basically it's just a sort of criteria where it kind of is computer generated. It creates a list of things based off the market. For example, I talked about the S&P 500 earlier, but the Russell 3000 is pretty much the total market index where it tracks the whole US market. Really great. The MSCI, I'm not going to say the rest, but that's more of the international market as well, and top international companies as well, traded on foreign exchanges. And a lot of these mutual funds or ETFs try to track these market indexes as closely as possible. Now, as far as ETFs and mutual funds, you can't go wrong with either, but there are pros and cons. Maybe I'll do another video. When I shoot the video, I'll make sure to insert the video here. Essentially, ETFs are really good outside of a retirement fund because they're more tax friendly than a lot of mutual funds. But mutual funds are really great because you can actually automate them. You can't automate ETFs, so that's something to keep in mind. And I heard this really good quote: they don't try to beat the market because they are the market. I think I read that off of Fidelity website or something. And if you are kind of curious about the pros and cons of mutual funds, I actually have a video for that, so I'll make sure to link it somewhere around here. Now that you know what indexes are, you might be wondering, well, how do I get involved with this? How do I buy them? And if this is your first time, I got you. Say no more, fam. Step 1, you need to pick your brokerage company. Now, there's a lot of brokerage companies. I'll leave some links below, but there's Fidelity, there's Vanguard, there's things like Robinhood, which I've all used in the past. Robinhood was really, really great back then when I first started hearing about Robinhood. I think it was about 2015-ish, 2016. And I was like, wow, zero commission trades. That is freaking awesome. That was revolutionary, because a lot of the time these big companies like Vanguard or Charles Schwab's or Fidelity, even then, they would charge you about $5 to $7 per trade, and it would get really expensive if you did more frequent trading or anything like that. So they really paved the way for zero funds. And Vanguard is actually who I primarily use at the moment. It's been tried and true in the past. If you asked me a few years ago which one's the best brokerage company, Vanguard had the lowest fees, they had the highest performance, they were the solution for everything. They were the number one company to go to. They have no minimums, zero commission trades, and it's really great for people who are starting off new. And so if you are going to pick a brokerage company, I would tell you, hey, start off with Fidelity. They have a lot of resources there, and they can be very high touch. They have 24/7 customer service. With Robinhood, you don't really have that. In Vanguard, you can't go wrong with that, but the fees and performance hasn't been as competitive as it used to be. Caveat emptor, I think that's the right term, right? Second, number two, you got to figure out the type of account that you want to hold your investments in. The analogy I always give is like investing is kind of like tacos, right? So you have your brokerage company, that's a taco joint you're going to, and then you need to figure out, hey, what type of tortilla do I want? Do I want corn, flour? What kind of meats do I want in the taco? And then how do I put it all together, right? Same exact thing. And the first step is really figuring out, hey, how do you want to hold your index funds? So there's a lot of different ways. Most common ways you'll see are things like 401k, traditional IRA, taxable accounts, Roth IRAs. Now, there's a lot. I actually have every single one of these accounts, just like I've had every single one of the brokerages that I mentioned before. They all have their pros, their cons. I'll probably do a separate video on that, but essentially it's either tax now, meaning you're using the money that you see on your paycheck that Uncle Sam taxed you on already to invest. There's tax later, meaning, hey, you know what? Your Uncle Sam is basically giving you IOU. You don't have to pay your taxes until you withdraw at retirement. And then there's tax now and later, which has its own benefit because your money is more liquid. Now, just like I would probably recommend as your first taco, you should probably get a corn tortilla. For most new investors, I would probably recommend opening up a Roth IRA. It's one of the most simplest accounts. Everybody should have a Roth IRA. Now, there are income limits, so make sure to check the IRS website or check with your brokerage company to see the limitations on it. But I would recommend you to do a Roth IRA. It is a tax now account, but when you withdraw at retirement, you do not get taxed on it. At the time of this recording, there's also special cases where you can withdraw money early, penalty free, and also you can always take your principal out as well. So I think that is something important to keep in mind. But make sure to check the IRS website because these rules will always change. But I highly recommend that you don't take it out because you really want your money to grow over the period of time. Step 3, pick your funds. Now, this is the meat of the conversation. What type of funds do I recommend starting out? If you haven't watched already, I actually do a full breakdown of the Vanguard versus Fidelity funds. And I also go over the zero fee funds that Fidelity released. So I'll leave a video here, but I'll give you a brief breakdown right now. Since we are starting a retirement account, I highly recommend a mutual fund. The main reason why over an ETF is just because we can automate these transactions every single 2 weeks or week. Whenever you get paid, you can take a set amount and just invest it every single pay period. And that's the most important thing, to automate your transactions and dollar cost average automatically, so you never have to time the market and buy at the wrong time, which can really hurt you. Now, if you want a really great start, I would recommend starting off with the S&P 500 index funds. There are bond funds and all that, but start off simple. Start up with either S&P 500 index funds. This might include for Fidelity, FNILX, which is the zero trade, zero fee fund for Fidelity, or FXIAX, or you can do Vanguard's VFINX as well. So those are some really great funds. Another great example that I would highly recommend, that I recommended in my video on how to invest with very little money for beginners, are target date funds. So Fidelity has its freedom funds, Vanguard has its target retirement funds, but I will refer to this video over here so you can find out more about them. And I lied, there is a step 4. Execute your transaction and automate it. This is where you put everything together. It's really that easy. If you can navigate an Amazon checkout cart, you can definitely do automated transaction. If you don't know how, I'll leave some links below from Vanguard and Fidelity, so they should be able to help you out, fam. And it's really that easy. Now that you know how to invest or how to buy your first index funds, you're probably wondering, do I have any other gaps in my portfolio? You absolutely do if you're going all into index funds. But say no more, fam. I'm here to help. I'm here to help you plug in your money leaks. I actually created a 12-point checklist designed to really help identify any leaks in your portfolio, get you higher returns, increase your passive income for entirely free. I'll leave the link below. And if you're a little bit stuck based off my tutorial, I actually have a free masterclass of how to set up your Roth IRA in just over the weekend and automate it to start your kick-ass portfolio completely free. I'll leave the link below. Also, if you like this video, please let me know by liking it below, subscribing, and sharing it with your current and fellow kick-ass investors. It really helps the growth of this channel. It's been kind of a struggle getting started up, so I love your support. Also, comment below, was this video helpful? Please let me know in the comments below. And finally, I love to hear, what type of index funds are you going to do? You don't have to do the S&P 500 like I said before, but anything that you are thinking about, please let me know, just so that I can learn from you. I'm always a new learner as well, so I love to kind of hear your advice too. All right, I will talk to you guys later. Have a great day. Start investing with other people, and I will talk to you later. Take care. Bye.